All right. I think I'll call it and welcome the next panel, who will be talking to you about cold storage and how we can reshape digital asset experiences. We have Marcus Pedrazat from AC and CVA, Sebastian Higgs from Cordial Systems, Ana Satia Nieto from Fireblocks, Akash Jain from PrimeVault, and Thomas Taroni from Phoenix Technologies.
Thank you very much. Check, check. Can you hear me? Wonderful. My name is Marcus Pedrazat, and I chair the Cybersecurity Working Group for the Crypto Valley Association. So every year I'm invited to host a panel talking about the technical and a bit less technical side of storing crypto assets securely and safely. So this year, remembering that this is an IEEE conference, so the Institute of Engineers of Electronics and Electricians, I asked my friends here to get the best and brightest minds of their companies to the panel to dive very deep into these technologies like HSM, MPC and TEE. But then they reminded me, look, Marcus, we're actually talking here about the technology to help the audience understand what's going on. Why don't you let us join so that we actually can connect with the audience and bring them along on the path that goes into the future of custody. So let me welcome the best and brightest of the custody companies and technology companies that we have on the panel here today. I'm going to ask everyone to introduce yourself very briefly, including by when did you enter crypto for the first time, and also by when did you enter the crypto technology / custody space professionally, right? In my case, I started mining Bitcoin in 2013 as a hobby, and then professionally entered crypto in 2016. Let's go through the round here.
Hi, good morning. Hope you can all hear me as well. So my name is Sebastian Higgs. I'm one of the co-founders and the COO of Cordial Systems. I've been in the space now, well, personally, since around 2016, when I had a bit of time off from working in the traditional finance world at Goldman Sachs. So very sort of classic entry point into this world. And professionally, it was 2017. So since then, always focusing on custody, wallet technology and infrastructure, focusing with things like HSMs and MPC, which we'll be talking about today, everything from cold storage to more MPC-based wallets.
Good morning. My name is Ana Santillan, and I work with Fireblocks as head of financial institutions for the EMEA segment, as well as co-country head of Switzerland. I opened my first wallet in 2019, but I only started working professionally in custody at the beginning of 2021. Thank you for having me here today.
Hi, I'm Akansh. I'm one of the co-founders of PrimeVault. And our journey is interesting. So we are core custody infra and liquidity infra for institutions, fintechs, and foundations. And the way we got into crypto was that most of our team comes from Rippling, which is a massive payroll company, global payroll. And we build the payments and the payroll product there. And when you're running global payroll at that scale, we realized that the traditional rails are broken. And that's what got us into the wallet infrastructure business, because we felt like we had two theses. Number one, that every business will have digital assets, that's one, and payments will get disrupted. And that's how we got into the custody space, and we built that today. So very happy to be here.
My name is Thomas Taroni. I'm a co-founder of Phoenix Technologies. So we have basically, personally, I've started 2016, 17 with some interesting experiments in blockchain. Then 2019, 2020, we have started really to do it professional in the space with our infrastructure we have behind, and then deliver 1 million of wallets to clients at the end.
The reason I ask you to put a date on the table here is because we're first going to do a little history lesson of how crypto custody became a thing back in a day. And we all know the Bitcoin white paper, and Bitcoin started in 2009, and for the longest time it was growing rapidly, but in total still was very small amounts. It was only when 2016 the spike happened and it exploded to a 10,000 value for a single Bitcoin and beyond, that people realized, oops, suddenly we're holding hundreds of millions worth of crypto assets in our operational systems, and it doesn't really work. We don't feel safe anymore holding these amount of assets for our clients. And that's when the first generation of HSM-based custody systems got started. Coinbase started their custody system in 2016. Bitcoin Swiss started Swiss Crypto Vault in 2017. A lot of other custody companies that we know now as the originals of custody, the big names, started in 2016, 17 or 18. And we all know Bitcoin and crypto has these hype cycles or the 4-year cycles, and every new cycle gets new people in, but also gets new technology advancements in. And today we loosely follow these advancements, and at the end we're going to look into the future of what might be happening with security technology, storing assets on and off chain in the future. So, Anna, why don't I introduce you to what happened when MPC started to become a thing?
Absolutely. I think that timeline actually fits in very nicely with the origins of Fireblocks. So Fireblocks was founded in 2017, and the first product was launched in 2018. And the reason our 3 co-founders got together was they came from cybersecurity, and they were part of the forensic team of experts that came to analyze the Mt. Gox hack. And they realized that many of the existing solutions that were being launched at the time were based on HSMs. And HSMs, hardware security modules, are single key devices, extremely secure, tamper-proof to most of the vectors of attack that were used by banks for decades to manage keys. But all the processes that were being built around cold storage of Bitcoin mostly at the time were extremely cumbersome, very long. They focused on physical tampering against the devices. And so it was very difficult to be able to actively manage those assets, trade them, settle them, move them with security. And that is where Fireblocks founding team got together and thought MPC was the right solution to ensure absolutely the same level of security of the assets, but actually a solution that enabled assets to move around and ensure businesses had scalability. It's great to have a very secure custody, but if it takes you 24 hours to get the assets out of cold custody and settle a transaction, it eliminates a lot of the benefits, especially in a very fragmented market with a lot of trading arbitrage opportunities. And so Fireblocks launched our initial solution with MPC. And throughout the first few years of life of the company, it was one of the main resources for success. It enabled a very high degree of security and a very high degree of scalability. And we went from 10 customers, 100 customers, that's roughly when I joined, 1,000 customers, 2,000 customers, billions in assets under custody, and the technology has secured over $10 trillion worth of transfers between counterparties of the Fireblocks ecosystem. A couple of years ago, we realized that financial institutions were ready to come into the space. And while they were intrigued by the advantages of multi-party computation, they were also not at a stage where they had the risk frameworks to understand how to fit them within the bank processes. And so, in a bit of a contradiction to what we thought would be the future, last year we decided to start working on HSMs again. And by now we have that duality of deployments where for some large financial institutions, we need to accommodate them in the risk frameworks. And they do have a preference to work with IBM or to work with Thales or to work with one specific way to manage keys. And that is okay. We can deliver the benefits of digital asset security and speed with that deployment. But for many institutions, MPC remains the best way to protect digital assets, scale businesses, and drive fast agility, which is very important in this ecosystem. A bit of history and coming to know.
Yeah, thank you. I remember I had just started as CEO of Swiss Crypto Vault in early 2000, and I got a call from someone at Fireblocks trying to convince me that their MPC solution is the future. And I have not really heard about MPC before, so I started to do my research and concluded this is brand new, and would you really trust something that is brand new? in such a high trust environment like crypto custody with billions of assets under management. And at that time, my decision was, it's too early. I can't do this. I need the security of a HSM. But I think, Seb, you're also doing an MPC-based custody solution. Maybe you can explain why MPC by now. What does MPC have that makes this a good solution for custodians and companies moving assets around?
Yeah, absolutely. So, I mean, as alluded to earlier, right, the historical context was very much hyper-focused on the key. We want to throw this thing away, keep it safe, and in doing so, was kind of applying a very disproportionate approach to security, as pointed out about egress times could be, 24 hours and such things, which, as we all know, crypto markets move very fast. Assets need to be accessible. Things need to move around at a very fast pace. And as pointed out, again, MPC kind of helped solve that in many ways, saying, you can have the security benefits as well as an availability and scalability component. So what is MPC, this thing we keep talking about, right? So we mentioned classically there is a single private key which can control the assets behind it. So if that gets compromised, it can be game over.
So that single private key, that's the HSM, right?
And traditionally for institutions that might involve using a HSM, it could be offline, and the tamper-proof device offers a lot of benefits for securing the key. But a HSM by itself is kind of a dumb signer in the sense of you present it something, it signs it. It doesn't really give it too much thought. So it's great at securing the key, but it needs some help with business logic. Again, there's still a single private key at the end of the day, which is where MPC comes in, because you no longer have a single key, you have multiple key shares. And to give you a bit of a concrete example, you might say, I want to have 4 key shares distributed across 4 different servers or parties, actors who have the ability to sign with their individual key share. But maybe there's a threshold of 3 of the 4 need to sign in order for anything to go ahead. So this is kind of the threshold security assumption, which helps to resolve the issue of a singular private key, which can be a point of compromise. If you have multiple key shares in different places, different devices and other approaches, then you're not kind of sticking a target in one location as such. And in that regard, MPC is great because you have this distributed key generation process, and it's not like you might have heard about key sharding. There's maybe a very quick distinction to cover off there. Key sharding will create a single key and then create fragments of it. So MPC doesn't do that because, again, you introduce a single point of failure with the key in the beginning, and there's other trusted processes attached to that. So MPC happens in this distributed fashion. So no one needs to know each other's private keys, and that also provides other benefits on top. However, to just extend a little bit further on the MPC side, where it doesn't perhaps work as far as an answer to everything, it is very good at making sure not one individual walks off with the keys. However, you could have a key share in 10 pieces, 20 pieces, 100 pieces. As you incrementally increase that, the marginal benefit is kind of tending to 0 at some point. You could still ultimately sign the wrong thing, and then it's game over. It doesn't matter if it had 100 people signing it. So that's what MPC doesn't solve, and gets into things like policy enforcement and the governance of key shares, which we'll probably discuss a little bit in more detail shortly.
So maybe we can very simply, very clearly outline the pros and cons of HSM versus MPC. I heard you mention a couple times, so HSM, single key, MPC, never a single key in a single place. But what does that mean? Why is one better or worse than the other? Maybe I can give you two a chance over there. Who wants to start?
Take that?
Yes, regarding to HSMs, in our view, my view, everything is about automation. And this means, for me, also the blockchain was basically the automation of the currencies at the end. And today we have switched somehow into a world where a lot of autonomous systems can talk to each other and also pay automatically to each other. And there is very heavy to interact with processes where people or persons are involved even. So let's have an idea that AI agent 1 paying something to AI Agent 2 without any consent from a person at the end. And this is happening already, let's say, in the research phase. And for me, blockchain is there absolutely the way to go, automated payments. And the HSM is the automation of it to sign the transaction at the end. So you have a lot of benefits there regarding to the transactions per second at the end, and also regarding to these policy frameworks that you can implement fully automated at the end.
So I'm hearing HSMs are very fast and can have policies implemented.
Yes, with the policies is mostly you do not consume an HSM, let's say in a raw format. You get back ones and zeros, like dump signing. This is what HSM is doing. Normally you have on the top like IBM or Securosys or other ones. You have a framework on the top that allows you to do all this fancy stuff with asynchronous signing, asynchronous approval of signings with multi-parties. I mean, each company have something like 2 of 3 have to sign. There is no use case normally in each enterprise case where only one person have to sign. This is not existing. While in the wallets of a private usage, this is normal. I have to sign. So this kind of differences clearly will be covered by HSMs today as a commodity, by the way, is no more something experimental. And their MPC is clearly bringing a new edge into that, but not have all the software development kits surrounding it, not all the tools you need to do that already as a commodity. I even not say that MPC is not able to do that in the future. I think it goes in this direction. But since HSM business is ages old, like decades, you have a lot of tools in place specifically already inside the bank that they have already in HSM, even without the blockchain, you know. So it's much more easier to adapt than that to a professional enterprise-grade solution than to bring in a completely new technology, even not challenging it's wrong or good or bad.
So I'm hearing HSMs have been around in banks for 40 plus years. Public key cryptography has been invented 50 some years ago. There's lots of tooling, libraries, best practices. Everyone knows how to deal with them very securely. Whereas for MPC, that experience is quite a bit shorter, even though the crypto theory behind this is very secure. The actual implementation, still not yet as much experience out there. So you need the very best developers, like of the companies that we have here, to do a good job. And it's less certain from the get-go that everything is safe. Is that a fair summary of what I heard?
I think it is a fair summary. And also, we were discussing, we didn't delve into it, but that difference between single key and a central point of compromise versus diversification of the key. I think from a security perspective, intuitively, we all agree that diversification adds to security, but fully agree that when it comes to education, when it comes to applications and experience, we all have to continue working with the ecosystem to ensure that it progresses. Compared to HSMs, it's a new technology. It has a long way to go to get to the say level of comfort and standardization for deployment.
And now we looked at the technical side of things. Technologists need to understand these frameworks and implement the HSM or an MPC algorithm and library into their tooling and custody solution. But it's also regulators who are dealing with these questions. And some regulators, some industry associations, they are very specific about what a good solution looks like. And I think in some cases, they still only look at the HSM as the top-notch solution. Does anyone have an opinion or an understanding of how that's going to change?
Yeah. Happy to say that very quickly. So exactly right. We see across the world different regulatory frameworks emerging. In some countries, they have a very opinionated approach on, 95% perhaps needs to be offline in cold storage, which points to having HSM-based solutions because, again, big banks are very familiar with these things. They like the certain FIPS compliance stickers on them and all of that. So whilst they want to have HSM-based solutions, they also want to think about, to Anna's point, how can we introduce MPC and play to the strengths of different technologies? And that's where we come in with a lot of our traditional finance customers and prospects, particularly the banks who are setting up their custody solutions. They want to bring their favorite HSM, again, whether it's IBM, Thales, anything else, right? And they have something doing an ultimate signature offline, which they can say, you know, this is a cold storage solution, but in many respects, that's the last mile of the product itself, which is where MPC kind of happens ahead of that process, where you can have, again, MPC uses more of an authorization signature to say, hey, we've looked at the policy engine, we've checked the access rules, transfer rules, correctness of this transaction, everything has passed the test, tick, 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 right? Make sure what we're putting through the system is actually what is intended and passes the relevant controls and policy enforcement points, at which point you kind of de-risk what you're asking the HSM to sign back to the point it can't think for itself in that regard for the most part. So you know when you send it to the HSM for a final signature, you know, it's kind of more of a formality at that point and you're ready to send the transaction out towards the blockchain with the online system afterwards. So yes, we have to deal with regulators insisting on certain things which can impose constraints, and that's just kind of the nature of the game in many respects. Some jurisdictions offer more flexibility, others require things to be within their jurisdictional borders, whether that's servers, critical IT. You can't always go to just a US data center, which is maybe a touchy topic for some countries out there.
Anything to add about the regulatory side?
Yeah, but I have a different angle actually. It's not about HSMs and MPC. Like when we came into the space, we felt from a security perspective, and I can talk about TEEs, that's the other technology which a lot of people talk about. We felt that, to your point, like HSMs, it's just a key signer, right? So it's listening to whatever you're telling. And we felt like the policy engine, which is actually instructing the HSM to do, and it's obviously taken care of by MPC. We felt like the attack vector moves from the key signing to like the policy engine, and that's what we felt like needs to be more secure. And how do you secure that? And obviously we can dive into what we've done with TEEs. But we felt like the biggest limiting factor for an HSM was that it can run basic code, but it cannot run complex code. So it's also not only important to look at HSM and TEEs and protect that. And this is not from a regulatory standpoint, but it's also important as an industry to make sure that the policy engine, which is actually governing the signing, is also taken care of, and that's either decentralized or it's made sure that it's secure. And I think that's also something which the regulators will look into, just beyond the technology that you use.
Very much so. It's always the complete system that needs to be secure, and both MPC and HSMs will just sign whatever the system tells them to sign. And if someone is able to trick the system into sending a transaction to be signed, then it will be signed. And that's where TEEs come in. Maybe we can take a step back,
Yeah.
Akanj, and explain what is a TEE, a trusted execution environment, actually.
Exactly. So so that's our journey. We came in 2021. Our security founder and team looked at it, and we said that we evaluated all technologies. We felt like the policy engine was one risk vector. The second thing, what we realized is that we're still in the very early innings of crypto. And when you need to process trillions of transactions, or you need really fast signing speeds, so the businesses of the future are going to look very, very different, right? And for that performance, that scale, and that security, we needed to evaluate newer technologies, and that's when we got deeper. And then we realized we picked TEEs, of course, with MPC. So we also implement MPC. So think of TEEs as think of it like a security bank box, a lockbox where no one can inspect what's happening, and there's this master, right? So in our case, the only person who has access to this enclave in a bank is you have the key to access it. And now what lies within this security bank box is both the policy engine and the keys. So now in this case, there is no other counterparty risk, right? Neither like an AWS or an Apple or even us can actually even look into what's happening, right? And this makes the system extremely secure because now both the policy and the keys are running into this, obviously with the advantages of MPC. So you obviously split that and you make the keys more secure. But we felt like once you have this entire system which is running right with the customer, it's far more secure. And the other big advantages that we started seeing were, when you're running this in one system, it's faster. Signing speeds are much faster. And the second advantage is automations. So you can automate anything that you like. And if you go into the deeper use cases of this, so number one was that, let's take the payments use case, right? When you want like signing speeds under 2 milliseconds, you're moving massive volumes, you can do that really, really fast. That gives you an advantage for institutions and payments. Very helpful in DeFi as well for traders or different institutions doing that. The brilliance of automations is that now you're a business, let's say you're a payments company, they don't have a tech team which is sitting and coding this up and also managing the security. So if you want to take a commission or a cut, you can just write that piece of code within an enclave. So the beauty of a TE or an enclave is that it can run any arbitrary piece of code along with the signing. And that's why we picked TEEs along with MPC as our technology of choice.
The first person who actually introduced me to TEEs in this context was Tom in about 2018, 19. Can't you talk about TEEs running in the cloud? You were talking to him about TEEs running on an IBM mainframe system. So this is like an established technology as well?
Yeah.
Yes, it's absolutely like that. If we talk about this engine that is running on the top and also secure deployments, this is very important. The potential attack vector is not only that someone is going into the system, it's also that someone deploys code or a container that have then malicious code inside. And there, these trusted execution environments are the key to resolve it at the end. And the mainframes from IBM had that out of the box. And I have thought then, hey, each bank has a mainframe. Okay, good, let's use it. We don't have to sell again the technology into the bank, so it's already there. But they have not known it, that you can use that also for blockchain transactions like Bitcoin. So we have always tried to adapt what was there. So we was very early by detecting that a trusted execution environment is resolving this issue. And in fact, by today, I would say all the large cases we know today from Switzerland perspective, running this policy engines inside of trusted execution environments, a lot of them running it on IBM mainframe at the end. And this is interesting for me because I basically, let's say, have not really heard about mainframes. I've known that it's existing. I have studied IT technologies, It was something in the blurry world outside there. But it is the key, in fact, and this technology is in place. So, and the large cases we have done with millions of wallets, everything's based on this hyperprotect technology. And one of the key things, you have to go really deep, but 2 facts. If you're using Intel SGX or AMD SCV, it's good technology. This is not the issue. But the key is pre-burned on the mainframe, on the main board. So someone else have the master key. You do not know who and where. With the IBM technology, there are also other technologies, but we are using this Linux One technology from IBM. You can bring your own key. So the client securing the trusted execution environment with his own freshly created keys. So even we as the operations company do not have any access into this policy framework. And this is important, Also our administrators on the deployments, and there we do not have access at the end. And so this allows you to run such workload, no more in-house. It allows you to run it inside of a cloud as long as you can have the concept of bring your own key.
So that allows your clients to know with certainty that you, as the administrator of the system, will still not be able to change their business rules.
Yes.
Exactly. So it's our clients feel like, whether it's a market maker or whether it's like payments company, they feel like we have no access and we can't tamper with it. And enclaves have like these attestations and other things, so it's proving some things. There are other obviously deeper ways of proving, like the enclave is doing exactly what it's saying. So it's far more secure, so they feel much better about it. And then when you have like millions of wallets or like millions of transactions or like fast moving back and forth, when those cases are unlocked, they feel like good about it. So we feel it's like a highly performant environment. And of course, there are multiple players. There's AWS Nitro, Intel SGX, and multiple sort of systems which have also stood the test of time. So yeah, we're pretty excited about it.
Yes, to add a second thing that everyone here should know, maybe on the whole conference, all of the blockchains, and it doesn't matter which one, have the backbone nodes. The validators or whatever that are the important ones. And these nodes traditionally have also a key inside, and they have to sign very, very fast the transaction, and this is then directly related to the performance of a blockchain. So, of course, you can do 100,000 transactions per second blockchain. This is not an issue at all. But you need then to reduce the validators to 4 or 5. And then these have to run very, very securely in such a trusted execution environment. So potentially it's a very good idea to run your main validators inside of such a trusted execution machine of a very powerful machine that have HSM inside. So, and today we face this, that a couple of blockchains have their master nodes on such machines at the end. And Switzerland is a good country for the trust question. I had to attach that one.
Yeah. Having a Swiss cloud or a Swiss service out of Switzerland, yes, of course, that's what we're all known for. Sebastian, I think you guys also have found an interesting way to protect the business rules of the clients from undue tampering.
Yeah, exactly. So, we spoke a little bit earlier about MPC is good for distributing the key in some sense, and you still need to have the brains behind it be appropriately secured so that you don't end up signing the wrong thing in the end. So classically, like one way of doing this is you can have a centralized database with all your rules in. This could be on the vendor side, it could be internally hosted, and that again becomes kind of a point of compromise as mentioned earlier. So there's a lot to unpack there. We probably don't have enough time to get into all of it, but so the way we kind of look at that is it doesn't make sense to have a centralized database which doesn't respect your threshold security assumption in the end, which is your 3 or 4 or however many in your MPC quorum. And so we actually thought, well, how do we kind of introduce a threshold to the policy engine itself and kind of have this distributed control plane is one way to think about it. So with our solution, when you run Cordial, let's use 3 or 4 as the example. You could have 4 servers running the software, each with a key share, which is co-located for signing. But they also have a co-located policy engine. So they each have the rules of the road that they understand to be the truth, and they don't need to trust any of the other signing nodes in the equation. They have something locally which they lean upon, and they sign based off of what they understand to be happening. And it's the same with the other nodes. So you kind of get to more of a consensus, again, kind of getting into more blockchain terminology. You have a consensus as to when something passes policy, because again, central database, you can compromise that, and then everything kind of gets abused on the key signing thereafter. If you have a consensus layer around your policy decisioning, if you compromise one of the 4, again, it won't be part of the consensus. The other 3 can proceed as normal. So you have the threshold is fully respected. And so this is an important part of how we handled the governance of the key shares. Everyone kind of knows not your keys, not your crypto. We also kind of can extend that in some ways to say not your policies, not your keys, therefore not your crypto. So that's probably a very easy way to summarize what we've been talking about a lot today.
think it's interesting that we started the panel talking about HSMs and highlighting a lot of the advantages, a very well-established ecosystem, very solid security frameworks, very well established adoption within the financial industry. But as we have been talking a bit more about the advantages of trusted execution enclaves, together with MPC, we see that there are additional advantages, more code that can be run inside of a trusted execution enclave that allows for better rules and better control of the policies that at the end of the day are the governance that will control the access to the keys. And so I think we have 4 firms strongly convinced that the combination of multi-party computation and trusted execution enclaves offer a path to the future. And I think we all have to continue working, educating, answering questions, working with certification bodies and regulators to ensure that all of these advantages are better understood.
There's a lot of education that will have to happen, totally. Now, it was interesting, Sebastian, that you mentioned you have kind of a blockchain consensus over your rules and policies. And in fact, there are a number of blockchains like Near blockchain or the Internet Computer Protocol who have taken MPC protocols and deployed them on-chain so that they in turn can act like a custody system for crypto assets of other blockchains. So you can store Bitcoin or Ether or any kind of token on a Near smart contract by using the on-chain MPC solution. And the very same thing also for the Internet Computer Protocol, ICP. That's an interesting advancement that's happening now, that custodial solutions or custody solutions, technologies, don't only have to run in these type of high security on-prem or cloud-based solution, but they can also move on-chain. I would just like to add this before we move to the next forward-looking, interesting development, which is using these on-chain stuff, but also trusted execution environments to allow agentic AIs to be involved in moving assets around. And Tom, I would like you to give an introduction of what we're talking about here.
Yes, yeah, it's crazy what's going on there, to say. And I've really seen a lot already at the beginning of crypto with all the ICOs. So the agentic AI is about when you have not only one agent inside of a software that's running somehow. So it's like you have an AI team of 20 virtual employees that interacting together. And here you have really like sales agent teams, etc. They interact on-chain directly. We have a lot of cases. They are seen. I've tested by myself a fully automated, let's say, mind that is out there everywhere else in social media generating $6 per month. I don't know, but it's generating somehow new clients of a product that it have created by himself. So it's really crazy. Everything is fully automated, and all these technologies we have talked about here now is part of it at the end. And it's not like one thing, it's like everything connected and multiplied by the whole world at the end. And here we will see a lot of interesting use cases and also cases where it's really needed to have that automated solutions specifically from the blockchain. This brings the trust in these communications.
Maybe we start to wrap up, and I would like to give every one of you a chance to end with a few closing words of how you see these technologies or new technologies come together to change the way that assets are stored, transferred, used in a more secure way than we do today. I want to start with you, Sebastian.
Sure thing. So I think we've spoken about a lot of technologies, and perhaps one that's increasingly more in the field of view we haven't spoken about is perhaps post-quantum. And getting ready and upgrading things for a world where everything needs to be quantum secure. We had a very interesting conversation in the back room about the timelines there. This is, I think we agree, kind of sooner rather than later, in the order of a handful of years even in some cases. So, you know, this could easily be the next big kind of hard fork event for things like Bitcoin in deciding what to upgrade to, and how does that further knock on to wallet providers or custodians and how they sign things. So this is very much something that's going to be a kind of an existential thing that needs to be dealt with in the near term as well. So that's one thing I would bring.
Maybe one that is less technological and more applicable to all of us. We are conducting a huge amount of work at the moment on tokenized cash and cash equivalent, with a lot of work with central banks globally and commercial banks globally. And I think we could be getting ready to support a significantly larger throughput of transactions as cross-border flows transition to an on-chain payment rails.
Yeah, I mean, similar, we're seeing like massive use case in payments and stablecoin beyond just your crypto tokens. And we're going to be very soon in a world where it's no more just a bank account, but like even a crypto wallet for a business or for retail user. And at that scale, when you have that level of throughput, like the technologies that we choose or we build need to be, built for purpose and serve that. And we're working very, very hard to like figure out the security and the performance angle to make sure that we're able to support like 10 years down the line when every business in the world has crypto assets or digital assets, as we say.
Yeah, from my side, more out of the research. So we experience actually a lot with the real random number generators of quantum computers. Potentially that makes all of that obsolete. We do not know. Let's see in a couple of years.
When we open the box, either it will have changed or it will not have changed. So, thank you very much, everyone. I hope that we were able to get you along on the journey, make you excited about the future. I would invite all of you to join one of the upcoming Cybersecurity Working Groups meetings. We always run those with a 20-30 minute introduction, a brief introduction to new research, new findings, new developments in the technology space, security related. Also, if there's any follow-ups you would like to do with us, since we don't have time for questions, we're going to be available over lunch outside. Please come and talk. Thank you all.